What's going on, ladies and gentlemen, boys and girls, and children of all ages around the world and country? As you guys can see, I made this video because earlier this week we know that the market is down about 4% due to two big slides. One day was like 700 points, another day 300 points with the market slid or whatnot. And I went on a live and I did a live video speaking about why you should keep cash in your portfolio because days like that are the days that you buy. So as we seen, the market went down 700 points. In that video, I put 500 points, but it ended up 700. Another video, the next day, I think it did like 300 or something like that. And I went live on that particular video telling everybody, hey, these are the days that you buy. You guys kind of forgive me a little bit. I'm at my brother's house in Savannah, Georgia. Came down to watch my nephew play football last night, which he did very great. But I wanted to go on live and speak about this. These are the ways that people over time, when you're watching the market go up and go whatever, everybody's happy when they're making money. Everybody is like, oh, Prince, you're great at this investing. It's a great idea. But when you have days like Wednesday and Thursday, where the market is sliding tremendously, that's when you start to question what the heck is in your portfolio. You start to look at this stuff and say, well, what do I own? Is it going to come back? Things like that. But to a long-term investor, if you hold a lot of the index, things like that, you can collect a dividend. If you have a dividend-paying stock, something like a Microsoft or Verizon, I'm going to get into Ford. I've been saying I was going to make a video about that. Hey, how you doing there, Tracy Walker? But the thing about it is, for the traditional investor that's in buying over time, continuously, whether it's $50 a month, $20 a month, $30 a month, whatever the case may be, if you're buying consistently over time, there will be downturns in the economy. For a prime example, we just had the stock market drop 500 points, 700 points. But as it dropped, if you would have brought that dip, you could have that a little bit of the 280 something point rebound that the Dow Jones had by itself. S&P went up around 30 something points or whatnot, right? So that's what I mean by buying the dips. That's why you got to have cash in your portfolio because bad times will come. For prime example, when people say, hey, save money for a rainy day, you have to save money for a rainy day. I know it's hard to do sometimes because when do people like to buy stocks? People love to buy stocks when things are going well. Man, I brought that Amazon stock is doing well. If I would have just invested more money, I would have more money. Man, I just brought that Google stock is doing so well right now. I just want to buy some more. I invested this much and the stock is doing this good. Imagine if I'd invested more. I want to invest more, more, more. And sometimes you can actually over invest and forget to save a little cash to the side because downturns will happen and come, and that's why I'm on live today is to talk about how that downturn happened. It wasn't a downturn, but it was a dip. How that little dip happened, then you saw that quick rebound. And while you're investing along the way, you can turn around, have your long-term portfolio. When the market is going up, that's not the days you buy stock. That's not the days you buy stock when the market is going up. Trust me, you have to take away the emotion. The day you buy stock is a day like Wednesday, Thursday. You create your watch list. You know you want to buy that Microsoft that was on sale. Who's remember the live video I made about Nike? When everybody was like, oh, Nike, Nike, Nike. Should I buy Nike, 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 Nike? And I said, man, and I told everybody in that video, by Christmas time, that was probably what, 2, 3 weeks ago when Nike came out, had the controversy with the quarterback Kaepernick. And I told everybody, hey, nothing has happened financially to the company, you know, and by nothing happening to the financial company, nothing happened to the company financially. I felt that everything that was happening was emotionally. And this is the time, if you want to buy Nike, that you buy Nike. And look at it. 2 weeks later, oh, stock done went back up and it's over 80 some bucks now. And I said, hey, by Christmas, people will forget about it. I'm wrong. I'm thinking people don't kind of forgot about it now. People have had that little knee-jerk reaction and they're going on by their business. That's the way you have to think as an investor. Those are things I learned over time. When you see that controversy and a stock drops off or the market drops off or anything drops off and it's a good company, nothing has happened to the company financially. Now, if the CFO left, the CEO left, you may have to look a little bit deeper inside of it. But when it's not talking about numbers, when it's talking about, people are mad because of Colin Kaepernick and a sponsorship that they did with a particular person. I don't look at that as a long-term effect of why I wouldn't purchase a company. I need more receipts and evidence. Now, if it's quarterly reports come out, annual reports come out, and you see a significant drop off in sales or branding issues, or something, then that may be different. But to come out and say, hey, look, we decided to sponsor a football player and everybody just starts selling their stock, you know, Michael Griffin says, excellent content and good information. Keep it going. Hey, thanks, Michael. Yeah, for people out there, thanks for everybody that's supporting. This has been on YouTube 5 years now. 5 years. I don't know how many videos, but it's 5 years. So it's a lot of great videos, a lot of great things that you guys have probably missed if you are new, because I know the channel grows every day. The Instagram, the Facebook, everything grows every day. But you can go back and look at some awesome people that stopped by. Check out the latest interview by Brad Thomas, Forbes real estate investor. Forbes real estate investor Brad Thomas stopped by and did the show. Very honored to have him on and to talk about REITs, Real Estate Investment Trust. And the guy has over managed $1 billion in real estate over 25 years. Very great expert, that value the channel and myself enough to come by and stop by. He wrote 2 great books, The Trump Factor, and I haven't had a chance to get him yet, The Trump Factor and The REIT Intelligent Investor. And he has a newsletter on Forbes that he puts out every, So yeah, that was the latest interview, but it's great. All type of great content from franchising, all of the stuff. He said, I will go back and watch. Definitely, Michael Griffin, go back and watch that. It's a lot of the great people, all the way from Jordan Belfort, the Wolf of Wall Street, to Andy Sorey, chief editor of Yahoo Finance. All type of athletes, CEOs of different companies and things like that. So experts from around the financial industry and field. But anyway, those are the dips that I want to stop by and tell you guys and girls out there. Don't get caught up, and give it a thumbs up if you're coming in and you like the content, if you like it or whatnot. But those are the things you have to pay attention to when you come by and you see something happening, right? You watch something happen in a company, you're watching finances. And another thing is, I haven't made a video about it. I'll probably make a video about it in detail. What was the name again? Brad Thomas. He was the most recent upload, the most recent interview. Brad Thomas. He just stopped by. I just uploaded that 2 days ago. Thursday. I know it was Thursday. So, but yeah, also check out the podcast for the people that want to catch out things on the podcast. The podcast, we're on iHeartRadio, Spotify, iTunes, Google Play, Stitcher Radio, Podbean. Wherever you catch your favorite podcasts is, I'm pretty sure that we may be there, if we're cool enough. So, and I keep trying to reach out to new platforms for the podcast to be featured on, Speaker, all type of places that it can branch out and make it more accessible to other people. And it kind of made me think about it too. I was talking to a guy, he's writing his first book, and he made the mention. He said, "Hey, Prince, I'm looking to buy write my book, and I can pretty much sell my book myself. Why do I need to go to Amazon or Barnes and Noble and things like that?" And my thing was, you want to go to those brands because it makes it more accessible to certain people. I know it's been a few times I've been walking around and back in my hometown of Waynesboro, Georgia, and somebody approached me and said, "Prince, I want to get your books. Where can I buy them?" And I would say, "Hey, they're everywhere from Amazon." "Oh, they're on Amazon? Okay, cool." Pull out the phone and boom. they will, buy it immediately. So because it's accessible. Some people use Amazon. Some people have iTunes. It's like myself. I have an ebook, audio, paperback, hardcover because some people like to consume it differently. Same thing with this show. It's on YouTube. It's on Facebook. It's on Instagram. Um, a little bit of Twitter. I don't tweet that much, but it's a little Twitter there. Website. It's an audio version on the podcast. You can get the visual version. I do a little bit of live content because you guys like to absorb things in different types of ways. You know, like if somebody has an album, and this has happened before, go to my website and download my album. Yeah, it's probably not going to happen. But if it's on iTunes, since I'm an Apple user, it's on iTunes, I might just pick it up. But anyway, that's kind of off topic, a little segue to kind of talk about it. But the big thing I want to speak to you guys was to reiterate that point of when you're investing, you watch me go live, and I say, hey, this is why you need cash in your portfolio, because the days like this is when you buy, right? Before that, the market was all bullish, it's going up, up, and nobody is thinking about the downside and what's going to happen if the market goes down. Everybody's trying to invest more and more. I've made those mistakes in the past. That's why I can speak on it. To say, oh, wow, I want to buy more. I'm going to buy more. I want to buy more. When it's up, save some money in cash for the down days because they will come. Remember, grandma, mom, auntie, uncle told you, hey, save some money for a rainy day. That's what they mean by those rainy days. Those rainy days are the days that the market takes a downturn. Let me share this out because some people may want to catch me live. If you guys got any questions, even though I don't have my line open today because I'm on the road, I wouldn't mind talking to you guys. Let's share this out. So anyway, guys, don't forget to share this out to anybody that you think may think this is cool to tune in. Excuse me here as I share this on my Twitter and on my Facebook. And that's what's been going on. Yes, and what's been going on with me, guess I'll talk to you guys here. Been pretty busy. I've been keeping busy, with school to study. And, okay, catch me live. Live. Ooh, I wrote the word love. Live right now. Yes, so I've been keeping busy with school, traveling around. I just did Westmont Elementary School. I'm going to upload that interview because growing up in high school and middle school, I always wanted to be on school news. Always wanted to be on school news. And, they always let the good kids be on school news. The kids that are getting good grades, the kids that are, all of the great stuff. I wasn't one of those kids by a long shot. So I decided to, oh wait, 1 second. I decided to, I wasn't one of those kids by a long shot. So I decided that I always wanted to get on some type of way or whatever. And I was on the school news and I thought that was pretty cool. I was on the school news at Westmont Elementary. I was there, spoke to the 5th graders, 6th graders, 7th graders. No, 3rd, 4th, and 5th graders. Awesome audience, by the way. I think I should upload that video, huh? It was only 1 or 2 minutes, but I was on the school news. I was happy about it. Like, man, finally, I got onto the school news. Growing up, I always wanted to do it. Would check out the replay. Thanks. Yeah, definitely. Definitely check out the replay. And I want you guys to be smart and to use your time. You catch things on the downside, not the upside. That's what most people try to do. Your emotions become tied into investing. But if you sit back, I'm a long-term guy on most cases, most things, and I just snack up on the downside. I wait. If the market drops 20, 30 points, maybe not then at that time, but you don't get 500. As of lately, we haven't seen 500, 700 point days in a while. So when I see something like that, it's like, boo, 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 boo. I had to pull over my car and go live with you guys. So I knew something was, hey, could it be a signal for a bear market? It could be. But hey, if the bear market comes, I'm going to ride that bear all the way down, right? Because we know, well, I can't, nothing is 100%. Nobody know, but it's a strong possibility. And when I learned about investing, it's a lot about possibilities. Something that took me a while to comprehend and understand. It's one of the reasons why I pretty much don't do startups anymore. You know, I invest into a couple startups, but now I don't invest into startups um, because of my opportunities that I have. And what I mean by that was when I was investing into startups, I really didn't have the opportunity to get into better companies. You know, franchising wasn't on the table. I didn't know companies that were already profitable. And I used to watch, and study Warren Buffett. And when I would watch him, he would all his rule number one: does the company make money? And in most cases, we all know startups usually don't make money. They're usually losing left and right for years, in most cases. And but people really kind of lost my chain of thought there. Right? I was reading a message that just came in. But anyway, when you look at people across the board, when you look at investing, you have to be consistent and to keep continuously going over time. And when you're investing, you invest and you do what the best that you know, right? Most people don't invest because they don't know that they could do that, right? That's how I was 10, 20, 30 years ago. I didn't know. Someone said buy mutual funds, and I brought a bunch of mutual funds, and I sat there and I was like, well, this is not too fun. But as I got older, I learned how to buy individual stocks. When I learned to buy individual stocks, then I learned dividends. Then after I learned dividends, I learned futures and forex and option trading, all these different avenues that Then I learned about the index, the S&P 500, the real estate. And as I immerse myself into investing, there's certain things that I won't do because I know where I can get something better. For prime example, someone say, "Hey, Prince, cryptocurrency. Why won't you buy that cryptocurrency?" You know, and Prince, why won't you buy this cryptocurrency? You need to buy that cryptocurrency. And the reason why is I compare everything to the S&P 500, the overall market. And half of investors, 90% of investors, they won't admit that they suck. And what I mean by that is majority of us do. And the reason why that is, I say that because we would sit there, we would hit a home run on something like a Tilray. Then we will hit a home run on an Amazon or Google. But then somewhere in our portfolio, we have an Under Armour, we'll have a oil, we'll have let's just go on a bad things of what I'm naming out. A Ford. Ford's been paying great dividends, but they haven't been performing stock wise. I'm going to do a video on that one separately. But when you mix all that stuff up in your portfolio and you look at how your portfolio is performing against the S&P 500, reality will sink in that you suck. Reality was for 90 something percent of people. And what I mean by that is I was speaking at my library back in my hometown, Burke County Public Library, and I asked someone in the audience, I said, "Hey, if I managed your portfolio last year and you made 10%, would you be happy?" Everybody in the audience said, "Yeah, 10%, more than what I had." Then I said, "Okay, true. Now, what if I told you that the S&P 500 went up 20%? Would you still be happy with my performance?" And everybody's looking like, "Oh, not really." Now, if I returned 10% of your portfolio, I took out my 1% fee, now your portfolio has a 9% return, you'd have been better off just putting your whole portfolio in the S&P 500. that's what it comes down to when I look at my portfolio. It's like, okay, yes, people always tell me, Prince, I'm doing great on this. Prince, I'm doing great on that. I made some money on this. And, people are showing their portfolio. Look, man, I made some money on the index. That's great. I'm up 10, 15, 20%. Okay, great. But what about that Bitcoin that you got in there? What about that oil that you got in there? Once you factor all that in, your portfolio is barely up 5 or 6%. We all know the market right now. I can't say 100% right now. I haven't did it. Of course, what just happened. But when you look at the market now, you can see that it's not even up. It's up over 10, 11%, right? And those are the ways, and those are the things that you have to look at, right? Those are the things you have to look at when you're looking at the kids. Hey, how's it going there? 3 Royal, what's that? 3 Royal Diesel. But that's where realization starts to sink in. People are screenshot. They'll show me one stock. Oh, look at my AMD. Okay, that's great. What about the rest of the portfolio? Oh, it's only up 5, 6%. You know, what did it say? What's that old saying? Anybody that played any sports or done any type of teamwork, you're only as strong as your weakest link, right? So if you have something in your portfolio, like right now, my portfolio that's not really doing too hot is General Motors, GM. Pays a dividend, but it hasn't been performing too hot. And also, I kind of, I know I'm kind of dip dabbing over what I'm talking about a little bit, but I kind of wanted to get into that concept that I spoke about of people putting their money into bonds. The downside to that, one you have to keep in mind, every time you buy and sell something, it costs money, right? I always been a big fan of VU, which is Vanguard ETF, low expense ratio, 0.04. But I since, this year discovered SWPPX, which is a Charles Schwab index. It's a Charles Schwab commission-free index. So every time you buy VU, a Vanguard ETF, you have to pay $6 or $7 or whatever your trade fee may be, if there's a trade fee, unless you have something like a Robinhood or something like that. But most places you're going to charge $5, $6 to the broker fee, right? And once you do that, once you do that, you have to think about different ideas and things. You got to think about different ideas and things that you have with people that are going on out there. As far as when you're in, when you're building your particular portfolio, and you always have to balance your portfolio and compare your portfolio to the S&P 500. And the reason why I asked that question, because if we all took a test, you turn the papers in, how do you know who passed, who failed? A lot of y'all are going to say, oh, well, did he get a 70? Did he score over 70? That's great, right? But you have to ask yourself the question of, did the person, in investing, what is the bar? What is the bar in investing? How do you know if your portfolio did good? You know what I mean? How do you know if your portfolio did bad? How do you know if your investment advisor, financial advisor is doing a good job or bad job? What are you comparing them against? Right? And like I was saying, every time you purchase a VU, or every time you purchase the index, it may charge you $5 or $6. When you go to sell it, it's another $5 or $6. If you're buying it every month, it's charging you every month. But with that Charles Schwab one that I know is the expense ratio is cheaper and it's commission free as long as you don't sell it within the next 90 days. So if you buy it over time, you're going to get the same performance as the S&P 500 for cheaper. It's only 40 something bucks for cheaper, and it's also going to grow over time. Right? You're getting the same dividends. You're getting, because Vanguard S&P 500 is about $260 something. right? $260 something. Say if you only got $100, $40, $50, but you can continuously buy the index with that. That can continuously grow for you over time. Those are the things that you need to be paying attention to. Those are the things that you need to, that you can get a bigger bang out your buck. So, but I'm not going to be on here too much longer. I wanted to hit you guys up and let you guys know. I want to do a follow up to what I was saying. And what I was saying was, hey, we did see the market drop off. In my title, it was 500, but it ended up being 700 points on Wednesday. Then it dropped off another couple points on Thursday. And I said, hey, these are the times you take cash, blood in the street, buy. It's raining outside. Grab a bucket, right, to get you catch some of this rain that's falling. Because when people say it's raining outside, some people look at it as it's raining gold. So they go out there and catch a bucket to get everything they can over time. And when you come back, here we come on Friday. Oh, look, the Dow Jones rebound. Look, Nike made $600 billion in market capitalization. He said, can I ask, do you look into the stock TMV? Not really. Which stock are you talking about in particular? You got a particular symbol you want me to look into? So I forgot who asked for that question there. But I want to see because I could pull it up right now. 1 second. It's Bear the Teal. I don't get what you're saying there. It's Bear the Teal. You're talking about it's a Bear ETF. I'm not focusing on what you're saying. Beef Entertainment, what's going on? My man, he goes hard. I see your stuff out there, man, sometimes when it comes across. Oh, TMV, okay. Oh, okay. I see what you're talking about. This is a Bear ETF that it seems like you have. What's your take on the... 1 second, let me do one question at a time. Okay, Bear ETF TMV. Levette, who's asking me that about the Bear ETF? This is what the Bear ETF does. I've sat back and I've tried to do some studying on this, and maybe I suck at it, maybe not. I thought about the concept of purchasing a Bear ETF and a Bull ETF. A Bull ETF is that when the market, like a S&P 500 Bull ETF, SWPXL, that's a leverage one. So a Bull ETF, a bearish ETF, when the market go up, the bull makes money. A bear ETF, when the market goes down, the bear makes money, right? So you can make money on a market going up or down. The only thing about it is, if you buy the bear, let's say if you say, oh, the market is going down, let me jump in here and buy this bear, then the market turns around and goes up on you. Yeah, that's a tough one. It's almost like timing. We all know over time, what does the stock market do? Does it have a stronger possibility of going up or down? So it's bear to the TLT. Wait 1 second. Now, the thing about it is, with me, if I knew that we slipped into a bear market, we officially was going into a bear market. When we have the '08 crash, the 2000 crash, all the market crashes, it just didn't just one day, whoop, 2 million points, and we went down 5,000 points, and we don't know what happened. It's usually big days, like because what do the stocks do? They take the stairs up, but they take the elevator down. When it starts to fall, it falls. 500 points, 1,000 points, 600 points, 700 points, 800 points. Then you start to realize, whoa, we are really in a bear market. That's when I was starting to take advantage of a bear ETF. Because on the dip days, you can, let's say if Wednesday, If I'd have went out and brought a bear ETF on Wednesday when the market went down 700 points, truth honestly be told, I would have made some money. Um, Future Past TV, it says, "Hey Prince, what do you think about marijuana stocks? Do you think," it said, "do you feel the USA would do like Canada and do a national legalization? If so, what do you think?" Okay, we finish up the bear ETF, then I'm sliding it down. I know I got asked like 10,000 questions, but we're gonna take them one at a time. I got a little time. So with the initial bear ETF, that's how I look at it. I will only get those if the market was to go down over time. But I will get a bullish ETF because I know over time the market will go up. Or my perception is that it will go up. That's what history has taught us, right? But on the bear side of the house, we don't know. Future Past TV, have you checked out the interview with Mr. Tim Cullen? Tim Cullen, the CEO of Colorado Harvest Company. He is in Denver, Colorado. As we know, Denver was the first city to legalize marijuana. And he owns, um, he said, "I have 300 positions. Should I only have two or three?" He said, 300. Boy, beef is not playing. So, but yes, please go into that, right? Okay, man, boy, I think that's GR. Is that you or Gary's brother, GR? You Gary Jenkins' brother? I think that's him. Because I remember him DMing me on Instagram about bond ETFs. And I got a chance to meet him in person. He came to one of my book signings in my hometown in Waynesboro, Georgia, in Burke County. Okay, so where was I at? So that's kind of my concept on the bear ETF. Marijuana. If you haven't checked it out, Tim Cullen, he owns two production companies, two pretty much greenhouses or wherever they manufacture marijuana. He owns two of those in Denver, Colorado, and he owns three retail stores in Denver. So he has like about 5 locations and very well versed into the marijuana industry. Someone who's actually out there doing it, has shops that are open, been doing it for 10 years. He got one of the first licenses. So definitely, please, please, please go check him out. Right? Yes, a little bit. I hope that kind of answers your question. Please, please, please go check him out. I'll probably do a separate video about that. So the marijuana game, sitting down with him, he came onto the show, did an interview, and how I look at marijuana, I do think, he said, "I found the interview." There you go. Yeah, check him out. You know, okay. Scooby Boo said, "What do I think of German car companies?" German car companies, they really haven't came onto my radar because when I look at car companies, I like things like I like General Motors, um, for foreign or Tesla. Foreign car companies, I haven't really gotten into them. I can't really answer them off the top of my head. I'm not educated enough to speak about them. They haven't came onto my radar yet, so I'm not going to sit here and try to, bull crap around about that. Let's talk about, okay, so the marijuana company. I do think marijuana will become legalized nationally. I mean, my history and my little knowledge of what I know of is that everything starts off with one state, then it goes to 2 states, and it goes to 3, 4, and it usually kind of grows. And I think that they have some cleaning up to do, some scrubbing to do. And everybody in the marijuana game right now, they are making millions, but they are losing a lot of their money due to taxes. So they have to find all type of ways to, pretty much all their money's been sucked out of their company. Uh, for the 11th month, I buy at least 1,000 shares of each. Okay. But so I do believe that marijuana will become legal, right? And the reason why I think that is because I think first we started in the city of Denver, then it went to, you got Colorado, then you got Washington and California. And once they kind of smooth things out and kind of learn how this marijuana business is going to be ran and regulated, which they're kind of doing, like Canada is doing, I think that we may be slow to the field, but once we show that I haven't heard any big backlash off of the marijuana industry. And Now they're not even putting people in jail for marijuana no more. I hear that you're getting tickets for marijuana, even here in Georgia, you know, and MG. So when I look at it, you got to think about it. So when I look at it, I look at it in the future, maybe not now. I said this before. We had a big green rush in 2015. Everybody thought I was crazy when I spoke about marijuana. I'm with you. I believe marijuana is going to be on the shelf like a Newport. I believe it. Somewhere, in the, and we're going to be those old people. We're going to say, oh man, you remember back in the day? I said, will you do any monitoring in future on the markets? Yeah, I'll do some. It's kind of hard for me to do things like right now I'm in Savannah, Georgia, at my brother's house. They all left to go look at a new house. He's looking at purchasing, and I stayed behind to do some studying and to talk to you guys. So being on the road, traveling and studying and going to school and interviews and things like that, it gets a little tough. It gets a little tough to put up a video every single day, and being active duty military. It gets a little tough to see every single thing. But I try to tweet a little bit. I try to do a little bit of something on YouTube and Instagram and Facebook. I try to utilize those platforms to get something out real quick. Like this, I'm on my iPad right now to set up my iPad and try to go live every single day. Maybe a little strenuous, so I don't really try to do it that way. So, but I'm very thankful and mindful of that. So I want you guys to be very in verse, driving. It took me 2 hours to drive from my hometown down here. I'm going to be headed back tonight or in the morning to meet up with some people and stop by and check out some people, all that other great stuff. So that's why. That's why I, love to do what I do. But I'm going to try to do a little bit more, monitoring on the markets and kind of, I don't know, you guys like me to do something like that? Do like more commentary on the market? Talk about particular stocks? Oh, okay. So I look forward to your information the way it's asked. It helps me out a lot. Okay. So yeah, he found the interview. That's how I feel about marijuana. What was the other question somebody asked? So the German-made car companies, I can't really say anything about that. Scooby Boo, that's the screen name. I think the name is. Okay, bond ETFs. Can you talk more about the bond ETFs? Okay, I look at it and I say, hey, where can I place my money? He said, have you future past TV? I haven't. Cryptocurrencies, asked me, has I warmed up the cryptocurrencies yet? I'm still on the sideline looking at the game right now. I'm still on the sideline. The cryptocurrency market and the people that was crazy about it have gotten very quiet. You noticed that, right? Compared to last December, this time last year, man, cryptocurrency was all over the place. I mean, I couldn't log in nowhere, or I couldn't be anywhere. Cryptocurrency. Then it got worse in November. Then when it hit that 20,000 in December, what Bitcoin did, man, it was everywhere. Pandemonium. Everybody was like, watch out, it's going to 100,000. In January, it was hot. Then February, around about February, March, that's when people started to, cool off. Then, when it dropped down to 6,000, I think that's where it's at now. I mean, you have a ton of them, but I watch cryptocurrency, I watch Bitcoin. But the thing I don't like about Bitcoin has never experienced a stock market crash. How will Bitcoin react in a stock market crash? When the next stock market crash comes, I wonder what Bitcoin is going to do. And I was monitoring that as the market took its downturn those last 2 days. And the thing I saw was that it was going down as well. It kind of follows the market already, right? So I don't know right now. I'm on the sidelines. I'm not sold into it yet. That's why I watch it. Future Past TV said he thinking will go up during the next market crash. That's why I watch it. Oh, she said you have the best options videos, quick and to the point. You know your stuff. Oh yeah, maybe I need to get back onto those option videos. Truth be told, a lot of my option videos, I didn't. I kind of stopped making option videos. Well, not stopped making them, but I didn't do as many. I don't put out as much option and tutorial videos. And just being honest, I felt that I was leading new investors into a slaughterhouse. That's just me being honest. People who never invested before, who never had a stock, who never done anything, they were waking up saying, hey, wow, I saw you make 200, 300, 400, 500, 600% on, on the stock market. I want to learn how to do this. They never even knew what a stock was. And then they jump into it. It's a reason why you have to have a special account. There's a reason why you have to have permissions. And then I just seen people who never even invested in their life wanted to option trade when option is supposed to be the advanced level. And I knew for a fact that 90% of those people, or 95% of those people was going to lose their money. Go long energy. I definitely believe that. Beef Entertainment. Beef Entertainment, how's your overall portfolio doing? You told me you got 300 positions. How's your overall portfolio? So that's why I kind of slowed it down. I said, you know what? I want people to be, I say, I'm a dude, but it's okay. I got that a lot with my name. Oh, oh my goodness. He said, hey, what's good? I'm kind of jumping in, but what do you think about Bitcoin being tied with the U.S. economy? Okay, then somebody asked me about REITs, right? So did y'all check out Brad Thomas' video, REITs, Real Estate Investment Trust? The guy's an expert. I was very glad to have him on. Very cool guy. Stop by. Check out his stuff. He has a lot of good REITs, Real Estate Investment Trust. A way to get into real estate without getting into real estate. Diversify, right? So I don't want to jump into that real quick. But who asked me the question here? Go long on energy, I believe that. So that's why I slowed down. I'm sorry for calling you Levette, but yeah, that's why I kind of slowed down on the options. I was like, I want you guys to be more educated. I want to bring better content, experts in it from around the world to learn the basis before I see you. I want to see you guys learn how to ride a bicycle before jumping on a motorcycle. And that's why I've kind of slowed down with it. But I can speed it back up and get people back into it. Bitcoin being tied into the U.S. economy. Right now, it's just too wild right now. It's just too wild. Right now, I'm really into technology. I like things like Google, Amazon, Facebook, Microsoft, Apple, those big blue chip technology companies. Those are the ones who's rocking right now in a bull market. And equities. I have a lot of index investing all the way. Of course, big S&P 500 investor. Okay. Okay, I can't really see it. I think it's too mature right now. Bitcoin, the U.S. economy, you got an unregulated market. Think about the stock market that's regulated by the SEC. Look how many crooks and stuff like that you have, right? And you got Bitcoin that's unregulated, just the wild, wild west over there. I think it has a long way to go. But that's something I keep my eye on. I don't want to be riding on a horse and buggy while everybody else is driving cars. So I definitely keep an eye on it, but I haven't warmed up to it yet. Kind of jumping in, and what do you think about Bitcoin being okay? What REITs do you like? Julius Sparks says, what REITs do you like? I appreciate your advice. Mr. Brad has turned me on to the West Coast. Right here in Denver, the West Coast real estate has been going very crazy. And real estate investment trust check out his episode where we talk about it more. It's the last video. I know I keep saying that, but it was such a great, man. You know, I thought that was such a great episode. And what I'm going to do is I'm going to take snippets. It's a 40-minute interview. I'm going to take snippets of. I'm going to do this a lot of my interviews when I have time. I'm going to take snippets from them and put them back out. Take little pieces from them and put them back out so you guys can digest them to 3 or 4 minutes. You don't have to sit there and watch a 40-minute interview, so you guys can get some strong pieces out of there. All right. Okay, what about Acorn starting out with? Acorn is better than nothing. Acorn is good because you are starting to invest. But I had a buddy of mine show me some stuff that Acorn was taking his money and where they was placing it. I didn't like those mutual funds. Expense ratio was high and it was underperforming the S&P 500. So I was not a fan of that. But then again, it's better than nothing, right? That's the way I looked at it. And who else we got on here? Oh yeah, steel. Okay, B says I'm up 0.27, 150%. So you're up, your whole portfolio is up 0.27, 150 positions green, 10 sideways, 140 red within 11 months. You're doing great. But boy, you got a lot of positions. Be good gracious. You might be overly invested. What platform do you use? You know, I should do portfolio reviews. Y'all like that? U.S. Steel Company, I definitely like. Bitcoin ETF. They've been trying that. GBTC is the company. GBTC, Future Pass TV, GBTCB, I think it is. That's the closest they have to a Bitcoin ETF. Those brothers are trying to get that going, you know. Jay Fox says Bitcoin is a bubble, don't trade it. Yeah, I'm not sold on it yet. So yeah, that's the closest you're going to get to a Bitcoin ETF right now that I know of. GBTCB. I know those twin brothers, they got denied. They're trying to build one, but I think the regular, you know, oh no, yeah, forgot. Blockchain has ETFs, but not Bitcoin. I do believe in blockchain. I do believe in that. Bitcoin, I can't really agree with you on that one, right? So let's go to the next question. U.S. Steel, I definitely believe in it. We had an episode about that. You know, when he put that tariff on the steel, he put that for U.S. companies. So I definitely am long on U.S. Steel. You know, tell me, you guys watch me talk about tariffs. You know what a tariff is. You know good and well that Trump did that for what you call it. Somebody put yes to portfolio reviews. You know, I should do that. Well, how can I get in contact with y'all? How can I get in contact with y'all to set up a date to do a portfolio review? We should do that. Portfolio review. That'd be kind of cool to look at someone's portfolio. Everybody's saying portfolio reviews. Okay, I'll find somebody out there that's willing. You can remain nameless. I don't have to put your name and what you're doing, but just look at somebody's portfolio and then put it out there for everybody to kind of look at it and see my thoughts. I'm not the best in the world, but I would definitely love to give my opinion and to definitely look at things like that. Right? So I definitely believe that. Future, I think the future whole stock market will be on a blockchain of some sort, or I'm just crazy. I believe it will be too. Future Pass TV, that's why I said I believe in blockchain. You know, because talking to the old school stockbrokers, James Fortland, who's going to come back onto the show. Y'all remember the old guy off of Wall Street? I like to keep old guys around me with a little gray in their hair. Guy from Wall Street, some lawyers, that's a little bald. They school me on a lot of things. And that's what he was saying. He like blockchain answers a lot of questions that we have it on Wall Street. But that doesn't mean cryptocurrency is. Right? So that's the way I look at it. The Whiteheads. Yeah, I have a lot of them. A lot of guys from Forbes, a lot of guys from Wall Street, a lot of guys from JP Morgan, Goldman Sachs, you know. Hedge fund managers, I keep a lot of them in my, in my circle. You know, I keep a lot of them in my circle. They school me on a lot of things. So I definitely believe blockchain, the stock market will be on blockchain with some sort. I can see that. You know, he said I had one ETrade and one TD Ameritrade. Okay. Paul Trader Jones. Who's Paul Trader Jones? I'll miss it on that one. So I like to call him Uncle James when he stops by. He's been around in the 70s. He's been on Wall Street since the 70s, the 80s, the 90s, 2000. That man has seen some stuff. Been around for a while. You know, he was there with Lehman Brothers, and I think Lehman Brothers, Bear Stearns is one of his companies. He said, I have three companies: a cable company for the 5G, the steel company, and that TMV. I'm green. I'm 10%. It's a small account. I just started investing in the past year. There you go. Okay. So you got the TMV. If that's your way of, and that's a way to hedge. That's a good way to hedge by having a bearish ETF. The best way to invest for your kids, 15 years. I'm going to let someone else answer that question. If you're looking to invest for 15 years for kids, that means you're probably going to be aggressive. What's going to be the number one way you want to start off investing? Where think about it. What's the one way you want to start off investing? Wow, it got quiet. I'm surprised nobody rogered up and said, hey, I'm brand new to investing. I was just at a school yesterday. The kids was like, you know. But anyway, equities. I'm going to say equities. S&P 500 is the first thing I would recommend someone to get. Now, you have a college plan. Don't get me wrong. You have 529 plans out there. But those college plans, what I don't like about 529 plans is, what I do like about them, tax deferred. Right? Thank you, thank you. I'm going to talk more about that too, but tax deferred. You got tax benefits to where the earnings can grow tax free. The bad part about it is it has to be used for school. What if my son doesn't go to school? What if my son's a dummy? Yes, you can pass off to other kids, but then you have to look at the fees, and then you got to look at their underperformance. That's what I don't like about 529. So I'm kind of or whatever. But if I was to create a custodian account, you can go in and you can fund a custodian account and start your kids off with an index fund that's going to pay them dividends that you can reinvest. Then you want to go into things that are going to grow aggressively, like technology companies, the tech industry is where I like to go. Good, solid tech companies like Apple, $1 trillion company, $1 trillion. That's that's a pretty solid company that they're using. Then make it fun. I will interact with them and see what they want to invest in. Then you can get some crazy stuff like some new marijuana companies you can throw in there a little bit, and you can throw in some new companies. Wow, good book to read starting out. Tracy, go to I have a playlist called Prince Review. I need to do more of these. It's where I review books. It's where I review books. You know. And, man. Let me see. That's where I would start off future. But I'm trying to think of all the books that I haven't read. Man, I read a lot of books. And I'm going to be getting back on here shortly and doing a book review, probably when I get ready to travel. You know, I'm going to send a text. You got to look at this guy. He's in Texas. I have books. You're right, Lavelle, but I have books, but they're children's books. I mean, but they're good for adults too. I was very surprised how many adults brought my children's books. But But yeah. But anyway, man, I like Tony Robbins. I like Unshakable. Tony Robbins Unshakable. I like Tony Robbins 7 Ways of Mastering Money. Um, man, I have a long list of books I read and that I need to do more reviews on. The one I'm getting ready, I don't want to spill the beans, but I'm going to get ready to do Lars Kroger, Investing Demystified. He's been on the show, hedge fund manager, Harvard graduate, Harvard cum laude, uh, came by, you know. He did my show a while ago. Very good mentor of mine. I definitely want to review his book, but I don't want to spoil anything either. Where is he? But look, guys, let me get ready to get out of here in a little bit. It was nice joining you guys and girls for stopping by. It's almost been about an hour. And you guys gave me some ideas, some portfolio reviews and things like that. We'll see. We'll see what people have to say. Probably have to do something like, I'm thinking of the logistics. Maybe you send me a screenshot, tell me what you kind of got going on, what's your goals, because I have to know what your goals is, how, if you're aggressive or not aggressive, and how you're doing and stuff like that. That might be cool. But anyway, let me get out of here. And let me, thank you guys for tuning in. I'm out of here. I'll get ready to go do a little bit of this weather with the family before I have to hit the road in the morning. And hit the road for a while, to hit the road again, to hit the airplane, and all of the good stuff, and get back to Denver. But let me get out of here, and I'm going to see you guys a little bit later on, all right? Guys and girls. All right, thank you guys for tuning in. Peace.